A day of mixed fortunes. Sensex and Nifty show varied results. The Indian stock market presented a mixed bag of results on March 7, 2025. The BSE Sensex, a key indicator of the Bombay Stock Exchange, witnessed a marginal decline. However, the Nifty 50, representing the top 50 companies on the National Stock Exchange, managed to close the day with a slight gain. This divergence in performance reflects the uncertainties and cautious sentiment prevailing among investors. The fluctuating global economic landscape, coupled with domestic factors, contributed to this mixed performance. While some sectors witnessed positive momentum, others faced headwinds, leading to a lack of clear direction in the overall market. The trading day began on a positive note, with both the Sensex and Nifty showing early gains. However, as the day progressed, profit booking in certain sectors and global cues led to volatility. This resulted in the indices erasing their initial gains and eventually closing with marginal changes. The mixed performance of the Indian stock market on March 7th highlights the prevailing uncertainty among investors. With global economic conditions remaining volatile and domestic factors also at play, the market is likely to remain range-bound in the near term. Sectoral performance. It takes a hit while automobiles surge. The performance of different sectors within the Indian stock market on March 7, 2025, was as varied as the overall market itself. The information technology or IT sector, a major player in the Indian economy, faced significant selling pressure. This decline came in the wake of concerns over potential US tariffs on IT services, which could impact the profitability of Indian IT companies. In contrast, the automobile sector emerged as a surprise performer, witnessing robust buying interest throughout the day. Despite concerns over rising fuel prices and chip shortages, the sector managed to attract investors. This positive sentiment could be attributed to the strong demand for passenger vehicles in the domestic market and the government's push towards electric mobility. Other sectors, such as banking and financial services, also witnessed mixed performances. While some banks reported strong quarterly earnings, others faced concerns over rising non-performing assets. This led to a lack of clear direction in the sector's overall performance. The contrasting performances of different sectors highlight the importance of sector-specific analysis in the current market environment. Investors need to carefully assess the factors impacting each sector before making investment decisions. Corporate highlights. Bharat Electronics soars, NTPC dips, Bajaj Finance gains. March 7, 2025, also saw some notable movements in the share prices of individual companies. Bharat Electronics Limited, or BL, a leading defense electronics company, witnessed a surge in its stock price. This positive movement came after the company bagged a significant defense contract from the Indian government, boosting investor confidence. On the other hand, NTPC Limited, India's largest power generator, experienced a decline in its share price. This dip was attributed to concerns over the company's rising debt levels and the government's push towards renewable energy sources, which could impact NTPC's long-term growth prospects. Bajaj Finance Limited, a leading non-banking financial company, or NBFC, also witnessed positive movement in its share price. This gain came after the company reported strong quarterly earnings, exceeding market expectations. The company's focus on digital lending and its robust asset quality continue to attract investors. These individual company movements highlight the importance of fundamental analysis and tracking company-specific news and developments. Investors need to be selective in their stock picking and focus on companies with strong fundamentals and growth potential. Section 4. Gold loses its sheen, demand dwindles in the Indian market. The Indian gold market, traditionally known for its robust demand, witnessed subdued activity on March 7, 2025. The price of gold remained range-bound, with a slight downward bias, reflecting the lackluster demand. Several factors contributed to this subdued sentiment in the gold market. Firstly, the strengthening of the Indian rupee against the US dollar made gold imports cheaper, but this did not translate into a significant increase in demand. Secondly, Rising interest rates on fixed deposits and other investment avenues offered investors alternative avenues for investment, impacting the demand for gold as a safe haven asset. Thirdly, the wedding season, typically a period of high gold demand in India, had just concluded, leading to a seasonal decline in purchases. Finally, the uncertain global economic outlook and the volatility in equity markets had a spillover effect on the gold market, keeping investors cautious. The subdued demand in the Indian gold market suggests a shift in investor preference towards other asset classes. While gold remains an important part of the Indian investment portfolio, factors such as currency fluctuations, interest rates, and global economic conditions will continue to influence its demand in the near future. Section 5. Rupee under pressure. Depreciation continues against the US dollar. The Indian rupee continued its depreciation against the US dollar on March 7, 2025, adding to the concerns of importers and policymakers alike. The rupee weakened by a few paise against the greenback, breaching the psychologically significant mark, reflecting the underlying pressure on the Indian currency. Several factors contributed to the rupee's weakness. Firstly, the widening trade deficit, with imports exceeding exports, put pressure on the rupee. The rising crude oil prices, a major import for India, further aggravated the situation. Secondly, the strengthening of the US dollar, driven by the hawkish stance of the US Federal Reserve and the robust performance of the US economy, exerted pressure on emerging market currencies, including the Indian rupee. Thirdly, the outflow of foreign portfolio investments from the Indian equity market also weighed on the rupee. The uncertainty surrounding global economic conditions and the attractive valuations in other emerging markets led foreign investors to book profits and move their investments elsewhere. The continued depreciation of the Indian rupee poses a challenge for the Indian economy. It makes imports more expensive, potentially fueling inflation, and impacts the profitability of companies reliant on imported raw materials. Section 6. Global headwinds, US trade policies and economic cues weigh on sentiment. The Indian stock market's performance on March 7, 2025, was significantly influenced by global factors, particularly the uncertainties surrounding US trade policies and mixed economic cues from major economies. Investors remained cautious as they assessed the potential impact of these external factors on the Indian economy and corporate earnings. The ongoing trade tensions between the US and China, coupled with protectionist measures adopted by the US administration, created an environment of uncertainty for global trade. This had a spillover effect on emerging markets like India, which rely heavily on global trade for growth. Furthermore, mixed economic data from major economies like the US, Europe, and China added to the cautious sentiment. While some indicators pointed towards a steady recovery, others raised concerns about slowing growth and inflationary pressures. This lack of clarity in the global economic outlook made investors risk-averse, leading to a flight to safety and impacting equity markets worldwide. The interconnectedness of global financial markets means that events happening in one part of the world can have a ripple effect on others. In this context, the Indian stock market remains susceptible to global headwinds, particularly those emanating from the US, which continues to be a major driver of global economic growth. Section 7. Market Wrap. Indian stock market ends the day on a cautious note. The Indian stock market concluded the trading day on March 7, 2025, with a sense of caution, reflecting the mixed performance of benchmark indices and the impact of various domestic and global factors. The BSE Sensex and Nifty 50 ended the day with marginal changes, highlighting the lack of clear direction and the prevailing uncertainty among market participants. While some sectors like automobiles witnessed buying interest, others like IT faced selling pressure, indicating that investors were selectively choosing their bets based on sector-specific factors. The subdued demand in the gold market and the depreciation of the Indian rupee against the US dollar further added to the cautious sentiment. Global factors, particularly the uncertainties surrounding US trade policies and mixed economic cues from major economies, continued to weigh on investor sentiment. The interconnectedness of global financial markets means that the Indian stock market is likely to remain volatile in the near term, reacting to global developments and their potential impact on the Indian economy. Overall, the Indian stock market's performance on March 7, 2025, was a reflection of the prevailing uncertainty and cautiousness among investors. With both domestic and global factors at play, the market is expected to remain range-bound in the near term, as investors await more clarity on the economic front before making significant investment decisions.